New markets news now. Asian markets mostly rose on Tuesday, with investors looking ahead to the release of the U.S. economic data and the earnings reports of tech titans this week. Oil prices steadied following sharp falls on Monday on relief that Israel's strikes on Iran spared the country's energy infrastructure and that the risk of escalation in the Middle East had eased. Concerns in the low market have now shifted back to focus on potential oversupply next year and a slowdown in demand from China, which is the largest oil importer. Japan's Nikkei added 0.77% and closed at 38,903.68, which extended gains from the day before. Hong Kong's Hang Seng Index is up 0.035% as of its final hour. The U.S. government will release its third quarter GDP growth estimate this week, as well as closely watched monthly labor market report ahead of the Federal Reserve's next rate decision just after the U.S. presidential election. Investors are also eyeing the earnings reports of major tech companies this week, including Google parent Alphabet, Amazon, Apple, Facebook parent Meta, and Microsoft. The S&P 500 gained 0.27% to close at 5,823.52. The Dow Jones Industrial average advanced 273.17 points to end at 42,387.57. The Nasdaq rose at 0.26%, closing at 18,567. And locally, the JSE is trading lower, with the all share down 0.1% at 87,556. The rand is currently trading at 17 rand 65 to the dollar, 23 rand 02 to the pound, and 19 rand 15 to the euro. Gold is trading at $2,750, and the platinum is at $1,060 per ounce. The price of Brent crude oil is at $72.16 a barrel. I'm now joined by James Turp, who's the head of investment strategy for fixed income at Sanlam Investments. So thank you so much for joining us on Point, James. Obviously, the market now looking very, very keenly at the midterm budget policy statement tomorrow. At Sanlam Investments, what are your expectations ahead of tomorrow?
Thank you very much for having me. And listening to your intro, there's so much going on in the world at the moment, isn't there?
Yeah.
But you're quite right. We're focusing now on the medium-term budget. So for South African fixed income currency markets at the moment, it's all waiting to see what comes out of tomorrow. Now, remember, it is the medium-term budget, so it's a little bit like a progress report. And what we're hearing from economists, ours included, is that what seemed like ambitious targets set out in the budget may well be achieved, at least at this point in time. So that there should be a rather positive note around that. But as investors, we'll be looking for some key information about perhaps a clue on the funding strategy. Will they reduce bond issuance, which is something that the bond market has been hoping for and would perform quite well if that were announced? It's not our base case. We think that perhaps it'll just stay as is for now. There might also be something around what they call a fiscal rule, and that's entrenching a law that says we must do this as a national treasury or as government. So they could be looking to achieve certain ratios of debt to GDP, or perhaps maintain a budget surplus as a rule. We know that they'll be trying to go for a primary budget surplus as a key objective at the moment anyway. So will we hear of anything firmly put out? And then maybe something else we'll be looking out for, any word on what Governor Lesetja Kganyago is talking about frequently, and that's lowering the inflation target. Perhaps there'll be some commentary around that too. So lots to wait for, but also, you know, it is the medium-term budget, as we say. So it's not the official budget, but the market's waiting to see and hoping for some good news.
Yeah. Earlier on here on Point, we spoke to some economists from Ashburton as well as the BER, and we were talking about the relevance of fiscal anchors at this point. And I remember one commentator mentioning that right now it's all talk, it's on all theoretical, the issue of fiscal anchors. To you, do you think they're useful at this point when we're looking at maintaining momentum of this good sentiment that we've been experiencing?
Yeah, certainly. I mean, anything like that, if achievable, would be taken well by the market. We are in a good fiscal position at the moment. I would say conservative spending is going to be a key theme to carry forward, and to talk about that as a sort of as a firmer mandate, if you like, would be a great achievement. Fiscal anchors may be a little difficult to put together at the moment, but so there will be mixed feelings around that, but certainly something we'll be looking out for.
Yeah. Let's quickly turn attention to the U.S. They'll be looking at their GDP as well as finding out if the Fed will once again slash the interest rates. How likely are we to follow suit, given that you did mention earlier on that maybe we might get a hint on whether the lowering of the inflation target is something that will be spoken of tomorrow when the finance minister tables his budget?
Yeah, exactly. So I would say it's unlikely they do mention something, but there's an outside chance they could. The market will be focused on. Back to the question, though, the Fed is expected to cut interest rates. Their economies showed that it's resilient, that it's not going to have this recession necessarily at the moment, this hard landing. So they're expected to cut 25, and then again in December, a potentially further 25 basis points. So I would think come November, we're going to see if our economists here at Sanlam, and most of the economists in the market are right, inflation below 3% year on year for up to October, which I think if you see that, you see the MPC in November, they'll be comfortable to reduce rates by another 25 basis points, which is in the market pricing at the moment. So I think we'll see that. But again, you raised the point, we know the governor wants to move the inflation target lower if he can get that right. That would require slightly more higher interest rates for a period of time. So it's finding the right balance to do that. At the moment, the market thinks there's another 3 interest rate cuts coming before rates stay flat and perhaps increase thereafter down the line. So that's what we're looking at the moment, and those will come more than likely November, January, and then we'll see from there.
All right, James, let's see if the market will like what the finance minister is going to be tabling under a new government, obviously, of national unity. Let's see if the rating agencies will give a nod and maybe move their ratings. And do enjoy watching it tomorrow, and we'll catch up with you hopefully later on to get your views about what came out. Thank you so much for making time to speak to us. I've been speaking to James Turp. He's the head of investment strategy for fixed income at Sanlam Investments, and he's been sharing his market views.